Hello and welcome to this session in which we will discuss the concept of sufficient and appropriate audit evidence. This concept is important in the auditing, whether you are a CPA exam candidate or an accounting student. In the prior session, we looked at management assertions and we said that management makes claims about account balances, transactions, and disclosure that make up the financial statements, such as the existence or the occurrence, assertions, completeness, valuation, cutoff, presentation and disclosure, so on and so forth. As auditors, we collect audit evidence to do what? To support our opinion, because we're going to be issuing an opinion about the financial statements that make up all these assertions. Now, what is evidence when we say audit evidence? Evidence refers to any information that as an auditor we rely on to form our opinion, because when we issue an opinion, we need some sort of a basis, and that basis is our evidence. The evidence is the proof. It's what we collected in terms of facts that's going to support our audit opinion. The evidence could be in writing, could be electronic. We could observe assets or observe activities in collecting all these evidence. And it's not any type of evidence. The evidence has to be both sufficient and appropriate. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. The persuasiveness of evidence has to be sufficient and appropriate. So for the evidence to be believable, to be relied on, it has to be truthful, accurate about the assertion and the statement. But specifically, the standard state, it has to be sufficient and appropriate. Now, what is sufficient? Sufficient deals with volume. How much evidence to collect? How much evidence to collect? Sufficient deals with volume, and we're going to expand on that. And appropriate deals with what type of evidence are we collecting? The right type of evidence. There's all sorts of evidence, but the evidence has to be relevant. It means it's testing what we needed to test. And it has to be reliable. It has to be truthful. Now, what we're going to do, we're going to discuss what sufficient is and what appropriate and the factors of appropriate, which is relevant and reliable. Starting with sufficiency. Part of the persuasiveness of evidence, it has to be sufficient. What is sufficient? Volume. How much? Now, remember, in auditing, we sample. We don't test everything 100%. Therefore, we have to make a decision about how much to sample. For example, if we have 1,000 items, are we going to take of that 1,000 items, are we going to test 100? Or are we going to test 50? Or are we going to test 10? So on and so forth. The sample size is considered sufficient when it's affected by factors such as the auditor expectation of misstatement. What does that mean? It means how much misstatement, how much mistakes are we expecting to see in this population? What is the susceptibility of misstatement? Is it easily to commit a misstatement by the client in these accounts, or the account is not susceptible to misstatement? Certain accounts are more susceptible to misstatement. If the account is more susceptible to misstatement, we expect to find more misstatements. Why? Because the account is complicated. It requires a lot of judgment, a lot of estimate. Well, the account is susceptible to misstatement. Therefore, we would collect how much evidence. Under those circumstances, we collect more rather than less evidence. Also, we would look at the effectiveness of the client internal control. If the client has good internal control means what? Internal control means policies and procedures that's going to protect the accounting information system from misstatement or detect or prevent the misstatement before happening. Well, if the company has good internal control, we expect less misstatement. Why? Because the internal control, their policies and procedures are preventing those misstatements. So if the internal control is effective, if it's effective, we collect less evidence. If the internal control is not effective, we cannot rely on their internal control, we collect more evidence. Now, we're going to have 10 to 15 lectures about sampling and determining the sample. Actually, we already have them, but the point is we're going to learn about sampling specifically. But for now, the overall idea is you would look at the susceptibility of misstatement, the expectation of the misstatement, and the internal control of the client that you're auditing. Now, for certain account, you are not going to sample. For example, if it's a medium or small company, they have fixed asset, they have 4 or 5 items, you would look at each item separately. Even 15 items of fixed asset, you don't sample, you look at them individually. Sometimes even 50, depending on what type of fixed asset you are dealing with, because it's one transaction, large dollar volume. We'll look at fixed asset later on. Now let's move from sufficiency to the appropriateness of evidence. It has to be sufficient and appropriate. That's the second component. Appropriateness, it has 2 factors. Relevance. Relevance is the first one. What is relevance? Well, the evidence that we are collecting must pertain or be relevant to the audit objective that's being tested. So whatever we are doing, it's meeting our audit objective. We have an audit objective, and the testing is meeting that objective. So this ensures that the evidence contribute to our conclusion. What are we looking for? Then we have to collect the relevant evidence. For example, the best way to illustrate this is to look, for example, let's assume we are looking for missing sales. We don't want to see, we're looking for missing sales. Auditors want to check that all goods shipped were actually billed. So we don't have any missing sales. It's completeness test. It's called completeness, the completeness assertion. Well, we could do one test. For example, we can start with sales invoices, then check if there's any related shipping document, but that's not going to help. So if we do that, that's not going to help our completeness test. Why? Because if we are already looking at sales invoices, we already billed the client. This is because all invoices have shipping document. There might be shipping document that were never invoiced. That's what we're looking for. We're looking at the missing sales. What we do should start with shipping documents, proof that goods were sent to customer, then check to see if there's a corresponding sales invoice for each shipment. Now, test 1 is not relevant for us. It's a good test, but that's not what we're looking for. We're not testing completeness. And knowing which test to apply is very important. Whether you are a CPA exam candidate or an accounting student, you need to know how to use the different type of test. This way, based on test 2, the auditor can make sure that every shipment result in a bill to the customer. And that's what we're looking for. We want to make sure that there's a shipping document, the customer receives the bill. There's no sales that are missing from our record, and the client is billed, so they pay for the services they received. So that's the first component of the appropriateness, which is relevant. The second factor for the appropriateness of evidence is reliable. Reliable is, can you trust this evidence? The degree of trust or believable in the evidence provided. Is it worthy of trust? Now, not all evidence is equal, and we have to understand there's a hierarchy for evidence. For example, evidence provided from an outside party is always better than evidence provided by the company. For example, if we're looking at the bank statement, it's a better indication of the cash position. It's a more reliable than the cash ledger of the company. Also, if we're looking to examine the prepaid account for the customer, or their prepaid insurance expense, or their prepaid insurance on the balance sheet, it's better to look at the insurance policy that's provided from an outside source about the evidence rather than looking at the policy, rather than examining the accounts. 2, the effectiveness of the internal control. If the information is generated from a better, more reliable internal control, we can place more trust in the information. Now, eventually, when we look at the internal control, also the internal control, whether it's low, medium, or high, we have to assess the internal control. Therefore, a good internal control would generate better information. Auditor's direct knowledge. You examining the information directly as an auditor, it's better than this information given to you by the client. For example, if you count the inventory, it's better than accepting the client count. 3, whoever is giving you this information, you want to look at their qualification, their knowledge, the qualification of the individual providing the information. So if you're looking at legal cases, you want to talk to the attorneys. You don't want to talk to the bankers or the finance department. If you're inquiring about the loans for the company, you want to talk to the finance people or their bank rather than discuss it with their attorneys. The degree of objectivity. Well, for example, a bank confirmation is more objective than a client attorney. Why? Well, the bank is giving you the information at face value, giving you everything that they have. They have no reason to hide anything. However, the attorney, they have to be very careful in what information they are providing you. So the degree of objectivity differ depending on the information that you have. When do you get the information? Are you going to wait 2 to 3 weeks, or are you going to get it almost immediately or the following day? Timeliness. Also, when do you perform the test? Is it done at the end of the year, or is it done throughout the year? For example, balance sheet account are usually tested toward the end of the year, income statement account throughout the year. So the persuasiveness of evidence is determined by evaluating both sufficiency, sufficient, and appropriate. You have to look at the combined effect of both. Why? Why? Because outside evidence might be relevant or it may not be relevant, but outside evidence, it's a high on the hierarchy of evidence. But if it's not relevant for us, it's not persuasive. So it is reliable, but not relevant. It's a good evidence, but not for what we want. For example, if we're looking at the bank statement and it doesn't show the loan balance and we're looking for the loan balance, well, the bank statement is good for cash. It's a good outside evidence, but not relevant for examining their loan accounts. Evidence that is relevant, but it's not objective. So the evidence is relevant to what we want. For example, if we're looking at the loan, we could look at the client amortization, loan amortization schedule. Well, that's relevant to what we want, but it's not objective. It's coming from the client. Maybe we want the amortization schedule now from the bank. Now, if we get the bank loan amortization, it's from an outside source and it's relevant. We have both. So both, we have to take into account the relevancy of the evidence and its objectivity. Also, if we have a small number of high quality evidence, if we have a high quality evidence but not enough of it, well, it's not sufficient. If it's not sufficient, again, it's not persuasive. Again, the persuasiveness of evidence depend on sufficiency and appropriateness. Sufficiency and appropriateness. You cannot look at, okay, I have enough evidence, but if that enough, I have a lot of evidence, but it's not appropriate. Or the evidence is appropriate, but not a lot. It has to be both appropriate and sufficient. Now, the cost of evidence, there's a cost to collect the evidence. When making a decision about audit evidence, we must weigh both the persuasiveness of the evidence and the cost of the evidence. Now, having said so, I have to make something very clear. The cost should not serve as a valid justification for skipping a necessary audit procedure. So you cannot say, well, it's costly, I'm going to skip these procedures. You can't do that. Or for failing to collect sufficient large evidence and a representative sample. So you cannot say, well, it's going to cost a lot. You have to take cost into account, but cost cannot hinder your ability to collect sufficient and appropriate. But you have to keep cost in mind. Let's take a look at this multiple choice questions from Farhat Lectures that deals with audit evidence. Which of the following statement regarding audit evidence is correct? Well, what does that mean? It means we have 4 statements. 1 is correct, 3 is incorrect. That's easy. If 3 are incorrect, let's start with the easy one and eliminate them. Well, let's look at B. Absolute assurance is a requirement in an audit evidence. No, absolute assurance is not requirement. We look for reasonable assurance. So this is easy. So B is out, should be easily out. Let's look at A. An example of highly persuasive evidence is the client's employee responses to the auditor's question. Well, is this a form of evidence? Yes, this is called inquiries. You can talk to employees. Is it highly persuasive? No, it's not. Because we're looking for the correct statement. It is a form of evidence, but not highly persuasive. So A is out. Now we're down to 50-50. Let's look at D. All evidence collected by the auditor must be highly persuasive. We would love this. We would love all evidence collected to be highly persuasive, but that's not going to be the case. And the word must make it incorrect. Be careful. Must is a dangerous word. Must, it means it must be. You have no other option. You would love to, you would like to, as an auditor, to collect all the evidence, and the evidence that you are collecting is highly persuasive. Sometimes it's not available. So therefore, D is out. By the process of elimination, C is the correct answer. Nevertheless, let's see if it's correct statement. This is basically, it's like a true-false question. Yeah? And on Farhat lectures, I have a lot of true-false questions, basically asking you which statement is correct. Let's look at C. The auditor must gather evidence to determine whether the financial statements are fairly presented. That's a fair and correct statement. No pun intended. That's a fair statement. It's a correct statement. Therefore, between A, B, C, and D, C is the correct answer. What should you do now? Go to Farhat lectures, look at additional MCQs. True-false questions. That's going to help you with audit evidence. The evidence that you collect for audit has to be sufficient and appropriate. Sufficient and appropriate evidence is an important topic, whether you are taking an audit course or studying for the CPA exam. Good luck, study hard, and stay safe.